and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be presenting this week's topic, which is titled, Climbing the Wall of Worry. Now, many investors have heard the phrase climbing the wall of worry. Informally, the phrase is defined as the time when uncertainty begins as to the sustainability of a market uptrend. However, those same investors often have difficulty identifying whether that market is indeed in a blast-off phase that will continue climbing the wall of worry, or whether fear is justified and that this upward movement is nearing an end. We have learned over the years that when you allow emotions to guide your investment decisions, performance tends to suffer. So we will allow the objective and time-tested indicators and information in the VectorVest program to point the way, which is my core objective for this presentation, and that is to convey to you the importance of the information provided in the VectorVest program when it comes time to decide, is it a wall of worry that will continue to be climbed successfully for the foreseeable future, or is it time to be fearful? A question we get often in this current market condition is it safe? Is it okay to buy stocks this long into the current uptrend? Now, it's not for VectorVest and certainly not for me to predict where the market goes next. That's not what we do at VectorVest. We time the market and we use important indicators, so we really don't know where the market's going to go. However, there are several places in the program we can go for guidance using those objective and time-tested indicators I mentioned earlier. And those indicators and information starts with the color guard. Secret number 3 of the 7 secrets to making money with VectorVest is heed the color guard. If you are not familiar with the 7 secrets, strongly suggest you watch Steve Chappell's great presentation from 12/27 of 2019 on that topic. But the idea is we're going to go ahead and use the daily color guard and the daily color guard report the same way we would in any market condition to alert us to any changes in the current trends. Next, we'll use the daily views. There's the view tabs. When we go into the program, I'll walk through all of that, but we have the daily color guard report right from the home page. We have the daily views section where we go through timing. You should be reading that and watching that each evening. Next, we have the Friday views. This is our extended newsletter on Friday, talking about things like timing and valuation. And for a more macro view of the current situation, we'll take advantage of the great information in the market climate table and the market climate graphs. So let's go into the program and take a look. The first place we'll come to look for market direction, of course, is right on the home page, and we will, as always, heed the color guard. And currently, the headline under the market timing gauge is that the color guard is mildly bullish, and that we have one tick into the green for our barometer needle, and the headline reads that VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. That market barometer needle being one tick into the green tells us that down in the color guard we have one green light, and it currently resides in the price column. And so regardless of where we are in a market trend or how long or short we're into an up or down trend, the color guard is where we're going to begin to gather the information on the current trend of the market. So when we talk about is it safe to buy stocks now, the answer is yes. We have green lights. All of our market timing indicators, our primary trend, our underlying trend, the confirm call, our DEW call is up, and there's a green light there. But here's what I would have you consider. If you are just beginning to create a portfolio, if you have missed this wonderful move to the upside we've seen since October of 2019, that's where the question comes often, is it okay to start to build a portfolio now? And the answer is, again, yes, but here is the consideration that's very important. First thing I'm going to do is I'm going to extend this view of the color guard here, and we can look back roughly 3 weeks. What I would urge you to do if you're just beginning a portfolio is to, using the analogy of jumping into the pool, I would have you step into the shallow end bit by bit rather than diving into the deep end. In other words, each time we see a green light, if you're looking to build, say, a theoretical portfolio of 10 positions, on each green light, begin to buy 2 or 3 positions to start building that portfolio. The idea being, if we start to get yellow lights and we start to maybe slip in a red light here or there, you'll know that it's time to start being cautious and to hold off continuing to build that portfolio. Now, if you're a little more prudent slash conservative, what we've not seen in this recent string of green lights is that green light being confirmed by the RT Kicker combo timing system. Just another piece of information on where this market currently is. The next thing we do is go up to graphs, and I can choose the market timing graph. Now I have a 1-year look back of the VectorVest composite here. Down below is the MTI, the buy-sell ratio, and the relative timing indicator. This is the VectorVest MTI layout. If you do watch the Friday's market timing or the weekly daily color guard report, this should all look familiar to you. What I also have here on the MTI, I just want to talk about for a moment. If I take off information and just leave the MTI on, I'm going to stretch this out just a little to get this lower end here and talk for a moment about the history of the MTI and what we've seen over time. And right now I have a 1-year graph. I'll extend that just to make the point clear. I've put lines in here. I've imposed lines at 1.55 on the upside of the MTI up to 1.6. We say in the VectorVest program, when the MTI approaches 1.6, we say that the market is searching for a top. To be clear, it does not mean all of a sudden the market is going to turn around and correct or crash. It's just a great piece of information to understand that historically, and again, when I say historically, I go back 5 years, and we can see when it reaches that zone between 1.55 and 1.6, how the MTI seems to revert back a bit. If I go 10 years out, you'll see the same thing. It doesn't mean that the MTI can't stay above those levels for any extended period of time. Again, it's a piece of information that we know historically the market is looking for a top, and that momentum can at this point begin to wane. So we'll continue to watch the MTI. We'll keep an eye on the buy-sell ratio and the relative timing indicators to alert us as to when this bull market or this melt up begins to top out. Again, we don't predict, and we won't try to predict when that's going to happen. We'll simply use these time-tested pieces of information to help us make better decisions. Next, I'm going to go up to the main toolbar, and I'm going to click on the Views tab. As I mentioned earlier, we have our daily views section, our timing section, Monday through Thursday. You read through that analysis portion. It will tell you why the color guard lights are the color they are. There's great information there. We have our summary section here and the extended view of the daily color guard. As you continue to scroll down, we'll give a daily strategy as to what prudent investors or aggressive investors and traders should consider. Then we have our Derby winners. It's a good indication of what's working now on a day-over-day basis, and then on a 5-day Derby winner list as well. Just the simple fact of knowing if the best performing strategies over the 1 and 5-day periods are bullish or bearish. That alone is great information on what the current market is doing. So that's the daily views. Next, what I want to do is take us into the Friday night views, and again, stress the importance of watching, timing the market each Friday and reading through these views. So as I record, the most recent Friday views are back on January the 10th. I'll go ahead and click OK. And what we have is our extended newsletter, and it begins with the overview section. As you see, we have valuation, timing, strategy section, and a climate section that I'll talk a little bit about. So as we scroll down, we can see the overview. We have live events, all good information. The weekend review. You can take a look at the previous week's movements and numbers on each day of trading during the week. We have our weekly essay. But what I want to focus on here as I scroll through is down at the bottom. Right below the essay, there's our earnings update. So as we look at a more macro view of the current situation of the market climate, we can get a lot of information right here. Last Friday it read, as of today's close, our market climate graph shows that the 50-day moving average of the VectorVest S&P 500 watch list average earnings per share increased to $7.10 per share. The average earnings growth rate, which has been falling since early February of 2019, it did remain at 8% per year. Then we talk about the market climate graph. It shows the earnings trend indicator. Okay, that has remained unchanged at a level of 1.06. Since it's above 1, the market is in a bull market scenario. So with the start of the fourth quarter earnings season upon us, we'll keep a close eye on what develops. So that's what we get every Friday night on the earnings update. But where I want to go now is to the climate section. And this is the market climate table I referred to earlier. It gives the indicator we have inflation, interest rates, and earnings. The three keys to driving the market, whether that macro view of the market, whether the economy is strong, whether the indicators of earnings versus the inflation and interest rates are going to continue to allow this market to rise. Because even through the headlines, even through the different topics that come up daily, those worrisome things that the overall market tends to focus on, what's really going to drive the market, of course, is earnings, interest, and inflation. So from the views portion, we talked about the S&P 500 earnings. We said the current level was at $7.10. And what we do is put that into VectorVest numbers on a 0 to 2 scale. And that number, and of course anything above 1 being favorable, that number for the S&P earnings, as noted in the earnings update, is at 1.06. And it's been there for the last at least 5 weeks. Now it is favorable, but it's certainly not growing here, and it is flattened out. I'll scroll back up just a little bit, and you also have each week under the climate section, again, a great review of the week, of the previous week, all important factors and indicators that go in again to that macro view. And finally, our composite investment climate indicators will walk you through those numbers and what's going on there. Our forecast of S&P 500 earnings rose again to $7.10. Its indicator remained unchanged. And the climate section is telling us we currently have a case 1 bull market scenario in which earnings and inflation are rising while interest rates are falling. And you could read more about that in the views of March 21st, 28th, October 24th of 2003, and then again some other essays, and you can look at to get more information on our bull market and bear market scenarios. Finally, we also have a graph of the investment climate. So what I can do next is go to the Graphs tab, and in the drop-down menu I've chosen the Market Climate graph, and here we're able to add on the top portion of the graph, the upper portion, we have the S&P earnings. Again, this is the 50-day moving average of the S&P 500 earnings. Remember, we said it closed at $7.10. Down below on the subgraph, we have the S&P earnings using the VectorVest 0 to 2 scale. And what we see is that while earnings are climbing, down below represents the earnings rate of growth. So it is still positive. Earnings are still growing. What we see here, however, is that the rate of growth on earnings for those S&P 500 stocks has begun to wane and has now stayed right at 1.06, again, for at least the last 5 weeks or so. So when we combine the daily color guard report and the daily views along with the Friday views and the Friday timing the market and the special presentations, when we employ the power of the market climate graph for that macro view of what's going on with earnings, interest, and inflation, all of these great indicators will help us determine when it's time to become proactive and protective of our portfolios, and it will help us determine how long we can climb that wall of worry. So always keep in mind your choices to protect and preserve your capital. Things such as buying protective puts on your overall portfolio or individual stocks. It could be as simple as tightening stops on the stocks that you currently own when the views in the color guard alert us that it's time to be proactive and time to be defensive. So remember, do not allow emotions to guide your investment decisions. Allow the objective and time-tested guidance in the VectorVest program to help point the way.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.